The S&P and the NASDAQ, hard to believe, on pace for their best weeks of the year. Even with yesterday's big drop in the first half of trading, we ended lower. The NASDAQ and S&P are actually on their pace for their best week since November. Wow. All right. So does that mean that any risk to this rally is officially over? What are the charts telling us? We just talked to fundamentals earlier. Let's go now to the charts and ask John Kolovos, Chief Technical Market Strategist at Macro Risk Advisors. He is here at Post 9. All right. You got three charts for you. Okay, the first one I'm looking at here, and again, I am no chartist, but I can kind of eyeball it. Corrective pullback with risk to 4,800. What are you looking at to see that?
Exactly. This is not a bear market, okay? So this is a correction within an uptrend. The way I'm looking at it is the S&P is going to rally up to around the 50-day moving average, falter a bit, and at least make an undercut low, be below the April 19th low. Ultimately, I do think that we could, or at least there's risk to 4,800, which is approximately where that rising 200-day moving average resides. In technical geek talk, you know what that's called? It's called an ABC decline. A down, B oversold rally, C washes you out.
Are we B?
We are in B right now.
We are in B, which is the oversold rally. In fact, one of our guests earlier mentioned RSI and how a relative strength indicator index and how we were down, so it's interesting.
That's exactly right. So with oversold conditions, this is the careful part. So there is a risk with this pullback, right? It should be run-of-the-mill. It should just be, washing out sentiment extremes. It should just be a seasonal sort of thing. But an oversold condition, and the way that we currently have, is a little bit too deep, where I would almost deem it a bad oversold. And that's dependent on, or as a result of, this heightened macro uncertainty that we have.
So support would be 4,800.
Correct.
Okay, so let's say you're right. Charts are correct. We go down that and we hit 4,800. Is that a sign to buy? Is that a bounce? Or do we need to watch and see if it holds? Okay. There's confirmation.
Right. All else equal, yes, you buy there. What would the risk here is that, let's say, the 10-year yield not only just gets above 470, breaks out above 5%. And the charts are still kind of pointing higher.
It's not impossible.
Right, exactly right. You break that, then I think we're looking at 4,500 for the S&P average, which would be a proper bear market.
It's important. And a lot of people, you may be kind of semi-paying attention. They're driving, listening on the radio, which we love, by the way, you too. If we break below 4,800, if the 10-year goes above 5%,
right,
you think we could go as low as 4,500?
Correct. That's exactly right. And what it will do is it will increase implied volatility across all asset classes. So it just won't be VIX spiking. It will be fixed income spiking. It will be currency vol spiking. And when that happens, the odds of a left tail event increase significantly, almost about fourfold, right? So like a swoosh of 10% could happen quite rapidly.
Well, so what is a left tail event?
A left tail event. Call it a mini crash.
Okay.
Right, that would be the risk if that would happen. So what we need to see to avert that, keep the 10-year under 5, keep oil under 90, keep gold under 2,400, keep Bitcoin above 60,000. You keep that, then this run of the
Bitcoin above 60.
60,000.
Okay,
so 60,000. Keep it above that level, then this should just be a run-of-the-mill.
Isn't it amazing how the yield on the 10-year and oil are almost exactly the same? If you overlaid a chart, we didn't, but if they throw one up, if you look back, and I don't know who's leading who's walking who. Well, that's oil or bond yields.
Right. Well, that's the thing that was bothering me all this year, which was like these hawkish macro trends that were staring us in the face. If you follow the charts, yields have been going up all year, oil going up all year, gold going up all this year, and then all of a sudden the hot CPI print came out, and everyone goes, "Oh, wait a second, this is important," right? It's all been about rising inflation expectations this year, but now there was a rug pull.
I don't want to sit here and brag, but I'm going to sit here and brag, which is that, if you watch my show, I'm a former commodities trader a long time ago. I do oil and everything. I was showing our viewers for months, copper's up, oil's up, aluminum's up, steel's up, and then everyone's shocked when we get a hot inflation print. It's like, wait a minute, every raw commodity, a lot of foods,
is up,
and then everyone's like, what?
Yeah, like out of nowhere. But
look at the CRB. Just folks, watch the CRB index. You're welcome.
Yeah. So this is the thing, though. If you're going to break the S&P, you got to break the stocks that matter most, right? Which are the technology names, right? The Mag 7s.
They're breaking higher.
But it's becoming more bifurcated, meaning semis look like they're about done with their correction, but software stocks aren't.
Okay, I think this is a chart too. You got the macro uncertainty index, and I love this. And one of the reasons I love looking at energy, in particular oil's global. A barrel of oil, for the most part, is the same in Russia, in India, Brazil, Louisiana. It doesn't matter. It just varies on quality of the crude oil. Macro uncertainty index. Now we're low. If I were to do a median there, which I think that's what that dotted line is, we are below that.
Right.
But we got a pretty messy situation in Gaza. We got Iran poking around. We got some domestic stuff going on. If this goes higher, does that whack the market?
Yes, that's right. That's absolutely right. And that's what I was hinting at earlier before. Once it gets higher, and actually the raw figure of this actually has given us the sell signal already. So from a very simple buy and hold standpoint, you want to be out of the market when that signal gets above that median
and we're
threshold.
Close. We're not there yet. Close. We can throw it back up there. That dotted line, that macro uncertainty index, kind of a sharp spike. And by the way, I'm surprised, honestly, it's not higher. Given everything that's going on?
Yeah.
So I don't need to tell people what's going on. It's Friday. I don't want to be some bad news.
That's right. Yeah, I don't want to get too bearish either. But to be honest with you, being the old commodity guy, I do think oil over time will be north of 100 and 120, and I think that will eventually put the S&P into a proper bear market. I just think threading the needle to get there, it's just not yet.
You think oil's going above 100? Huh?
Oh, yeah.
Everyone asks me what I think about oil. I don't know. I think if I knew where oil was going, I'd be richer than I am now. I would quit this job and go be John Arnold's assistant or something like that. Right. But it's ticking up.
It is.
That's for sure. John Kolovos, really appreciate it, man. Thank you very much. Great stuff. Good charts. Loved it. Learned a lot. John, thank you. All right.